Today we're going to talk about homeowners policies. So let's get right into it. So I'm going to leave me up there. Not that you really want to look at me too much, but if I get in the way, I might just take me out. But just good to know that I'm here. So here we go. We got Paul's Peace of Mind Insurance. So brand new agency. Nah, I'm just kidding. Obviously, this is a test. We got Paul Tester, Amanda Tester on 123 Tester Street. So all this is obviously not real information, but this is in the form of what a policy would look like. So you're going to have your opening letter. Those of you that know a little bit about me, some little Easter eggs. I had a little 316, so I did put this stuff in there. But I won't get into that right now. So, all right, so Paul's Peace of Mind, and I'm going to have to take a look, because if I get in the way too much, I might just boot me off the screen so you can actually see the full document. But here you go. Here's the deck page. So if your agency or your producer says, hey, can you send me the deck page? We're starting to get into that, okay? So it's where all the coverages are. So your policy period, 99 times out of 100, it's going to start at 12/01. On the exact day that your other policy would cancel. And here's your premium. So your total premium is always going to be there. And, you know, the risk address, the address of the property. Any discounts. Every policy is going to be set up a little different. It might not say policy discounts right here. It might look a little different. And we're going to look at one other one after this, just so you can see at least two different ones. What they look like. So let's go through the coverages, right? So dwelling. So what is dwelling? Okay. So dwelling is going to be the structure of your home. You know, the walls, the roof. A good way to look at it. Some people will say if you took your house and put it upside down, shook it, took everything out of it, everything that falls out would be down here, personal property, which we'll get to. But the stuff that doesn't is your dwelling. So this number here, so this is very important. So this is going to be your coverage for your house or your property, okay? If it needs to get rebuilt. If you had a condo policy, it would be the same thing. It would be like whatever you're responsible for on the inside, okay? So the master policy would cover the entire building, but your actual unit, whether you're studs in or studs out, those are the kind of things you need to look at. But that'll all be in your your bylaws, your agreements, all that stuff. But we're not going to talk about condos. Let's just talk about a regular homeowner policy. So this is how much you would get to rebuild your home. Doesn't mean your home is worth $753,000. That's not the market value. This is just rebuilding your home, from the ground up. So some things you want to look at with this, some very important things I'd like to point out is that, inflation, different things like that, you're going to want to guard against that, because if pricing goes way up during the year, so let's go back up March 16th to March 16th. Now, if you remember COVID year, which maybe I should have put that year in there, would have really made this interesting. But March 16th of 2020 to March 16th of 2021, you would have saw a big difference. So, but that's what you want to look at. So, what typically happens, you're going to be asked a questionnaire, whoever your producer is or your agent or however you do it. You're going to give them all the information, everything about your house. Like, I could go literally through everything. You're going to go through, what kind of electrical you have, what kind of plumbing you have, all that stuff. It's going to feel like a million questions, but it's not really that many questions. But it's going to tell you everything about your house, right? So that's what's going to be typed into, a replacement calculator, replacement cost calculator, or estimator. They're called all different things, RCE. But that's what you're going to type in, and it's going to spit out a number. And it's going to say, this is what your home, to rebuild it with materials and labor, this is what it would cost. So that's what this is. So you always want to make sure that this is in line with what it actually is going to cost, right? So that's a very important number. So you kind of always want to have a little bit of leeway there, just in case prices go up or whatever. So that's your dwelling. That's coverage A. Coverage B is your other structures. So what would other structures be? Just think of B, and this is how I learned it. When I first started learning about insurance, just think of, back of the building, B. So that would be something, that's not attached to your home. So if your garage is attached, it's actually going to fall under coverage A. So if you have an attached garage, that's part of your dwelling. If you have a unattached garage or a standalone, that's going to be B. And this can be all types of things, right? This is just other structures on the property. If you have a shipping container, you have, a shed, you have a fence, different structures on your property are going to be falling under other structures, right? And I can go on with that. So usually that is a percentage of A. So usually that's what you get for B. And then C, also personal property. So this is going to be all the contents. So just think of C as contents. C for contents. B, behind the building. C, contents. Get those two down. You'll be ready to go take that insurance exam. No, I'm just kidding. But those are two things to make it a little bit helpful to remind. But you don't have to remember these letters. Let's just look at the names. I'm just being a little more, detailed here. But really, it's just what are these things? So personal property, this is all your stuff, right? Everything in your home, everything you own. And, if you have a renter's policy or a homeowner's policy, now homeowner's going to give you quite a substantial amount for your personal property. But keep in mind, it's very important here, okay? So it doesn't mean they're just going to cut you a check for $527,000 because you say, hey, everything in my house is gone. Okay, so it has to be things that you had, and then some things have limits. So like if you have a lot of jewelry or you have like a lot of guns or things like that, it's not just unlimited per category. So you got to always read the fine print. Typical policies might just be, let's say it's $2,500 for jewelry. So that's the max they're going to pay for that one category. So if you have $100,000 worth of jewelry, you're going to want to write that up separately and get extra coverage just for that jewelry, which we'll get into as we go through it. So you got your dwelling, your home, other structure on the property, this is your personal contents. What's loss of use? So loss of use would be, God forbid, your house burns down and you got to go find a new place to live. Like, and literally, this happens like on a dime, right? So like, it's never planned. So all of a sudden, tonight, where are you going to sleep? Where are you going to go, right? So that's where loss of use comes in. Like, that's like immediate, you need to go somewhere. So you need to find a hotel room, whatever it is. It could be months before your house is rebuilt. So that could be a long time. So that might seem like a lot of money, but being at a hotel or whatever you're going to do in the meantime, this is going to help cover a lot of those costs. So loss of use is very important. You want to have that. You hopefully never want to have to use it, but it's just good to know that you have it, right? So let's also look at personal liability. So this is, your liability, right? So what some people don't realize is, and probably I didn't realize it when I was first learning about insurance, is that liability goes with you, right? So I used to always think of liability as somebody gets hurt on your property, and that's what liability was. But it's more coverage than that. Same thing with personal property, right? So this homeowner's policy is gonna follow some of the stuff around. So your personal liability, let's say you're at the beach, get an umbrella, flies away in the wind, God forbid, hits a child, hits a 5-year-old, the 5-year-old gets injured, and then the next thing you know, you get a lawsuit, right? So that would help cover you there, okay? And same would be true if this was a renter's policy or a condo policy. So it's going to follow you around. Same thing with your personal property. So, I've talked about this in other videos, but you leave your laptop in your car, God forbid somebody breaks in, steals it, that wouldn't be your auto, unless it was installed in the auto, like in the dash, like a permanent laptop, but just your loose laptop that you have, that would be your personal property. Okay? So that would be covered under your homeowners. So things like that. Okay? So now we got medical payments. So what's medical payments? So medical payments would be payments that is paid to other people. Okay? Not you. Okay? You can't tap into this. But if you have somebody come over your house, something happens, maybe they fall down the stairs, maybe your friend comes over, your uncle, whoever, and you don't want to have a lawsuit. So you're like, hey, you know what? The bill's not going to be that much. Let me tap into my medical payments. Maybe it's like $3,000, whatever it is. So that would be covered under medical payments. So it's just a little something. And, $5,000 is pretty common. I see $10,000 a decent amount too. Personal liability, you can go up. Like, see, I was like $9 here for $500,000. So like sometimes you go up to $1 million. You can double it, and it might be like $30, $40. So a lot of the times, that's what I recommend when I'm looking at your policy. If that's not what you have, is to go from $500,000 to $1 million. Because if you start looking up what things cost, like brain injuries could be $500,000. A broken bone could be like $75,000. I mean, I could make this video super long, and we could do a deep dive, and I could go on websites, and we could start Googling things and finding out what things cost on average. There's a lot of websites out there, but these are just numbers on paper, and that's what I like to stress. They're just numbers on paper, but God forbid, when it's time to call your insurance to put a claim in, like, you just want to have that peace of mind that you're going to be covered for like what could happen. Now, you can always get more stuff. There's probably never enough insurance for every scenario, but you want to feel pretty good against the odds there. So you want to make that phone call, and your lawyers and different things like that. So liability can go a long way with a lot of that stuff. So covering lawsuits and stuff like that. It's not just the actual of paying of the claim. It could be you need an attorney. Something crazy happened. So but that that you always want to read all the fine print with that. But so down here we got our deductibles. So let's move on so this video is not super long. So we got our deductibles right here. Common now on a homeowners is $2,500. A lot of times on auto, which that'll be a different video, it's like $1,000, maybe $500. If you're in Rhode Island, sometimes you'll see $750. But yeah, this is your deductible, so you're gonna pay this before any claim pays out. Okay, so you want to be comfortable with this number, and obviously the lower the number, the more comfortable you'll be. But obviously the price makes a difference, right? So the lower this is, your overall premium is gonna go up. Okay, so that's what you want to keep in mind over here. So $2,500, that's your house, right? So if your car, some people I've heard it worded this way. I thought it was kind of interesting, but if you're paying $1,000 deductible for your auto, don't you think your home probably makes sense? $2,500, and it's probably a pretty good outlook on that. But anyway, you want to be comfortable with that. So there's two ways to look at this, right? So let's say you wanted to save money and go with $2,500 deductible, and I've seen this in policies where it could be $500 a year. It can be all kinds of things. So let's say it's $500 a year to go from $1,000 deductible to $2,500, right? So if you're someone that doesn't file a lot of claims, and you're paying a higher premium every year, so you're paying another $500 on top of this, right? Because you want $1,000 deductible. You're paying $4,100 every year, right? You do that for like 5 years, 6 years. I mean, you're talking $2,000, $2,500, right? Whatever it is, do the math. How many years? Eventually that's almost a whole year's premium. So just some things to think about with that is, if you go with the $2,500, you're saving that money every year, and when you're paying more for the $1,000, but you don't ever file a claim, you're kind of it might not make a whole lot of sense. So let's look over here. We got named storm. So named storm, this is important to look at too. So sometimes you're going to see a wind, hail, something like that, but named storm is going to be when they name a storm. So a lot of times the hurricanes are named storms, right? So you got like Hurricane Matthew, Hurricane Katrina, Hurricane Gloria. I'm gonna date myself way back to the 80s with that one. Geez, I was a kid when that one came around. But yeah, once it's a named storm, then your deductible is not $2,500 if the named storm causes the damage. It's 3% of your coverage A. So 3%, do the math, of 753, you know, it's going to be a lot more than 2,500. And so let's check it out on the calculator. So we got 753, 3 times 0.03, $22,000 deductible, right? So if your roof gets damaged and, you know, it was a named storm, your deductible is going to be $22,000. So you got to look at these things, right? These little things are on your policy and nobody might have explained it to you. So that's what you're looking at with that. And one quick thing I just want to get into here, while we're still up here, we're going to dive down into the, you know, the lower half of this document in a minute. But I'm telling you what's covered here. But there's a very, very, very important thing here that I haven't gotten to yet. And it's one of the first things I look at. And I'm really, you know, I'm very much contemplating doing an entire video on this. And that is replacement cost versus actual cash value. So what's the difference? So actual cash value is going to be, you know, what that item is worth after depreciation. So for instance, you go buy a brand new TV at the store. Let's say you spend $1,000 on it, just to make the math easy. You know, once you have that TV, 3, 4, 5 years, you know, it's not worth $1,000 anymore, right? It might only be worth $500 or whatever the heck you could get for it on, you know, those marketplaces that are out there. So, you know, that's what it's worth, right? So the insurance takes that into account. They're going to pay you actual cash value. So they're paying you what it's actually worth. So that's the way to remember it. It's what is this actually worth right now, right? So when we talked about dwelling, we talked about replacing the home, right? So that's replacement cost, right? So that is the big difference that you want to look at with different sections of this, right? Personal property, dwelling, how different parts of this policy are covered. Is it actual cash value or is it replacement cost? Because that's a big difference, right? So if you had your TV and all your personal property was actual cash value, then you're only going to get what that's worth after depreciation. But if you have replacement cost, then you're going to get what it would be, you know, what it would cost to go to the store and get a new one, you know? So especially this is more so with renters. You know, people may ask you, hey, you know, what's your stuff worth? All of your personal property when you're doing a renter's form. Because, you know, on a home, it's going to be like a percentage of your dwelling, and it's usually going to be enough, you know, unless you have something crazy out of whack of, you know, an art collection or something going on. But, you know, when it's a renters, you might have $25,000 worth of stuff, $30,000, you know, it's, you know, you got to kind of figure it out. And it's what would that stuff cost to replace it? You know, not what you paid for it. Because a lot of times, what do? We buy stuff when it's on sale. You know, so that's not what they're asking. They're not asking what you paid for it. They're asking what would it cost to replace it brand new. So I am going to quickly just jump ahead just because I want to get to this section here. Where is it? And I don't want to deviate because I don't want to be throwing you all over the place. So don't get all discombobulated on me after we get into this. Let's see where we are here. All right, premium coverage. All right, so this is the type of things you want to look for, right? So this is the premium coverage, which we're going to get into what that is. But see how it says the replacement cost of that part of the dwelling, right? So now we're on coverage A, dwelling. If you go to your personal property, they're settled at replacement cost at the time of the loss. That's what you want. You want replacement cost because you want to be able to go replace it. You don't want to be paid for actual cash value, right? So you got to look at these things, or at least, whoever you're working with, have them go through and explain all these things to you so you understand what you're getting, because it's just not a generic thing. And let me show you this thing real quick. This is going to be up at the top. We'll go back to the top, actually, where we were. I don't want to get lost down there. Get too far away from where we were. So up here at the top, sometimes you're going to see this. And this is huge. This is huge, okay? So this is the roof. This was on a different policy here. Let me blow that up even more. So let me look at me. I don't want to be blocking anything. So here's the roof, right? So the roof right now, if you see something like this with a percentage, that means that your roof is not at replacement cost. Your roof is at actual cash value. So because of how old it is. So once your roof is aging, it's just like driving a car off the car lot, it starts to go down, right? It depreciates. So this roof is 5 years old. So this company is saying that if something were to happen, they're only going to pay you 85% of what that roof would cost. So let's say a roof was $20,000 and it was 5 years old during this year. When you have to file a claim, they're going to only pay you 85% of that $20,000. So this roof is newer, so it's not horrible right here, but that's already a big difference. When you start talking thousands and thousands of dollars, 85% versus 100% can make a big difference. So you want to look at that. And I've seen these. Oh, sorry about that. Got updates going on. I've seen these, go up and up. So, I've seen one that was like, I believe it was 15 years old. It's either 15 or 16 years old. And this number here was down to like 42%. So, that's less than half they're going to pay you for the roof. So most policies, I would say, a lot of policies do have full replacement costs on the roof. So if you don't see this big thing at the beginning, you definitely want to go through and read everything. But most likely your roof is going to be at replacement cost, okay? Because they make sure that this is out there for you to see. This would be a big block. Somewhere at the top of your policy near this section. Usually. Not always. Maybe it's hidden. This is just a general lesson here. But that's what you want to look for. You want to see this percentage, the roof, and, you want to make sure you stay away from that, because when your roof's 15, 16, 17 years old, man, what a great thing to have if it would just get fully replaced if, God forbid, something happened for a covered loss at 100% of what it would cost to replace the roof. Because we know that prices of roofs, they go up all the time. So you don't want to have that old roof and have to pay, the new price. It just makes a huge difference. All right, so this here is your form type. So this is your HO3, and this is your special form. And, there's all different forms with this. But this is probably your most common, the HO3. But, it ranges HO1, HO2, HO3, all the way up to HO8. But you don't have to concern yourself with all of those. Some are a renter, some are a condo. Biggest thing to know with this is what it's going to cover. The biggest thing with these is named peril versus open peril. So named peril, it's actually going to name the perils that are covered, in the policy. Like your fire, your lightning, your windstorm, your hail, all these different things like that. Vandalism, all this stuff. So that's what's going to be, listed in a named peril. An open peril is better. So an open peril is not going to be on the list. So it's going to be all the perils, pretty much. But always a caveat: earth movement and flood are never covered. I guess never say never anyway. But you're probably never going to find those in a typical homeowner's policy. It's always going to be by endorsement for those two coverages. So flood, earthquake, if you want that coverage, you're going to have to get an extra endorsement, to cover you in those situations, or an extra policy. All right, so for the most common, I said it was the HO3. The next one up would be the HO5. And the reason why he goes 3 to 5 is because the HO4 is like a renter's policy, which we won't get into. But HO3 to HO5. So on your 3, the dwelling up here, that's covered with open peril, which, is better because it doesn't have to be on that name list. So on your 3, the dwelling is open. Your personal property is going to be named. So you're going to have named on your personal, and dwelling is going to be open. If you go up to an HO5, then you have open on your dwelling and open on your personal property. So that's the big differences there. All right, so let's move on. Let's move down here. So here's going to be your endorsements and your coverage forms. So what you want to look at here is a lot of times insurance companies, so let me scroll down so I don't block me. Insurance companies are going to offer packages, right? So there's a whole bunch of endorsements. It could be pages and pages and pages and pages when you go to the site of all these different endorsements. But to make life easy, what a lot of carriers will do is that they will put a package together of the most common, endorsements that you want to have. So what's an endorsement? An endorsement is going to be something added to the policy. So it's going to be either something that adds coverage or it takes away coverage. So it's just a change in the actual like HO3 or HO5, whatever the overall policy is. So premier coverage, and you can see it's got a premium here. It's $5.95, but that'll contain a lot of little things in there. So here's some things that are in here. Obviously, we're keeping with Paul's Peace of Mind Insurance Company, and we got Paul's Identity Protection Service. We got Home Protection Service. We got Auto Rewards Endorsement. We got a Named Storm Deductible. We have different things like that are changing the policy. We got Limited Fungi, Safety Package here. All the endorsements here are $6.45. So here's what I want to show you here. So see these numbers here? What you want to do with these numbers is what the heck is this? Premier, I don't know what that is, right? I mean, what's in that, right? So if you see this 1380 0121, you'll just scroll down here and we'll get to all this. There we go. Premier coverage. So it's going to tell you everything that's in there. Let's just go to the bottom. See 1380, page 1 of 6. So that's what this section is going to get into, right? So it's going to tell you everything in that premier coverage. So property coverages, this is different little things that have to go with this that you want to read over. So little things that may pop up when a replacement cost for the entire loss on this endorsement is more than $500. We will pay no more than the actual cash value for the loss and damage until the actual repair replacement is complete. So, little things. I probably picked a bad one to read there, but because I don't want to take all day reading through all these things. But here's some of your loss settlements, right? So this is how they're gonna handle losses. So here's special limits of liability, different things like that. $5,000 for loss of theft, misplacing, or losing of jewelry. So some of the stuff is really good because on a normal homeowners, it might just be $2,500. So this is bumping up some of your limits here, right? Trees and shrubs, it's giving you that. Fire department. So that's a good one, right? So the fire department gets called. There's going to be a fee you got to pay with the fire department because they got dispatched, right? And hopefully it's for a false alarm. All right, your refrigerator, everything in your refrigerator, your freezer, you got $500. Lock replacement costs, so $750 if the locksmith has to come. And some of the stuff you might want to see, look, it's not subject to the policy deductible. So you got to remember, if you have a $2,500 deductible, then you'd be like, well, what the heck do I need that for? Well, this is because you're not going to have to pay the deductible. They're going to cover up to $750. So water backup. So that's a really important coverage to have, because water backup, if let's say some tree roots grow into your pipes, or something happens where it's really tough, or a plumber's not going to get to it very easy, and it causes a backup of water into your home, you want to have something that's going to help you cover that. So it's going to cause some damage, different things like that. So, but that's what this stuff is here. Page 6, you go through all these. So that's all you're doing. Let's go back to the top here. is you're just matching up. You want to see what that is, you just go down there, right? And I probably pick poor examples. If I had more time and really wanted to be detailed, spend more time on this, I would go and highlight the best things of that, because there's probably a lot of great things in there if we were to sit there and just read it all, right? Identity protection, what's that? You'll bump down to that. These usually go in some kind of order. If you look here, the special form we were talking about, that's what these bigger ones are. So that's the main one, the one that I was skipping over. So if you just start there, here it is, special form. So this is where it's going to explain to you about the open peril and named peril and all of that stuff. So your dwelling, your other structures. So see, it'll probably be over here. So this is your normal policy, where it's probably going to show you a limit for jewelry, or it's probably around 2,500 somewhere. Of course, I'm not going to find it right when I'm looking for it. Oh yeah, here it is. So $1,000 of jewelry, right? So that's even less than I see on something. So that's bumping it up down there in that other add-on to like 5,000 or whatever we saw. So like I said, we're not going to spend all day reading line by line. Every policy is different. But this is the special form. This is the HO3. So this, and I know insurance is not the most exciting thing in the world. So loss of use, digital living expense, we kind of talked about, fair rental value. So all that stuff we were talking about, A, B, C, it's all right here. A, this is all the residential, the other structures, what they don't cover if you're using it for business, different things like that. Personal property, all this stuff, right? So this is going to go through all that. Loss of use, additional living expense, we talked about that. Fair rental value, that gets a little different. I'm not going to get into that right now. There's some things with dwelling and fire policies too. If you're renting out a unit, let's say if you're renting part of your property out here, you could get fair rental value. That goes under that same one, that's loss of use. So you having to move out, if you had somebody that lived with you that was paying you rent, they have to move out too. So it's going to help you get the rent back. So that's pretty cool to have too. So trees, coverages, all that. So I'm not going to get into this. This video could be hours and hours if we get into all this stuff. So here we go. Here's like naming some of the perils. Vandalism, all this stuff. So actually, let's go over here for a second. This I want to just slow down for a second. So here is the list. So when you go here, this is gonna give you the list. So perils insured against. So this is when we say named perils. This is the section that we're talking about right here. So the coverage A and the coverage B and all of that, but it's gonna give you the named perils over here, and this is where it's gonna list them. Caused by freezing of the plumbing, freezing, vandalism, theft, any of the following, and then you go over here with personal property, fire, lightning, windstorm, hail, explosion, riot, aircraft, vehicle, smoke, vandalism, theft. So it's going to break down your section, and then it's going to list the perils, it's going to name them. So that's where you see the difference. I know we quickly went through it, but I just wanted to slow down for a second so you can see the title mainly. Just go to this section. I know I've been scrolling up and down, but it's going to clearly define it. And then you can just look through and see like what's covered. It's kind of interesting to go through it, sometimes. And then here's exclusions. So this is huge, right? You want to know what's excluded, what's not covered, right? So ordinance or law. And I'm going to get into that because there's a section on that I'm going to get into. But earth movement, right? So what is earth movement? That's earthquake, right? Water damage. So, these are the main things here that are excluded, right? Like we talked about, right? So earthquake, flood, that's not included. So it's spelling that out for you, War, neglect. Intentional loss. Obviously, insurance, you can't intentionally do anything, right? So those things there, I wanted you to take a look at. All these types of things. So So let's go down, and then it's going to get into some of your other endorsements. Here's your liability, personal liability. There's your medical payments to others that we were talking about. So all that stuff's right here. So, you want to learn about it. You want to know exactly what it is. Hey, spend an afternoon, read all this stuff. You'll be forever changed with your knowledge in insurance. So, all right, let's keep going with this because I don't want to make this super long. There's other really cool stuff I want to get to, just so you understand your homeowners. So you go through all this. That's the premier coverage we talked about. That's one of 6. So let's drop down. You can see this thing's 57 pages long. So there's a lot of stuff here because there's a lot of these endorsements that come after it, right? Identity fraud, right? I mean, I could go on and on about your homeowners here. So Paul's identity protection, and it kind of gets into these things again. Obviously, that's made up Paul's thing here. So home systems protection and what that does. And there's another 7 pages. And let's see. Covered service line, evacuation, exclusions. So exclusions are the big thing. When you see exclusions, that's taking away from things. So you definitely want to pay attention to exclusions because what's the opposite of inclusion? Included is excluded. Exclusions. So always want to read that over. So auto rewards. This is just because this policy, if you're bundling your home with your auto, they get a 25% credit applied to your homeowners. So everybody likes to save money. So that's why, if you can bundle, we like to. This is going to explain the name Storm Deductible and what that means. National Weather Service names the storm. And what's this? Liability, no section 2. So anyway, so this is the end of it at the bottom, but I want to go back to the top because we skipped some stuff. So but now you have a general idea of what's on your policy, what the different categories are. Where do we leave off here? All right, so here we're going here. Now just go down there, match it up. Not rocket science. I mean, you guys probably already know this stuff. It's going to tell you some premium, some stuff it might not, because it might be part of this package. So if you don't see it here, it's part of the package. It's telling you different things, how much the endorsements cost. Then you're probably going to have your mortgage information here, because if you're paying, you don't own the home. They have an insurable interest, which I'm not going to get into all that in this video, but obviously you need to have an insurable interest in the property if you're the owner. And obviously if you owe money, then that company, they have an insurable interest. And pretty much what that will mean is that they can take out, like, you can take out insurance on something you have an insurable interest in. So that's just something to keep in mind. So and I just looked over here and I forgot that I'm over here on what you're seeing. So hopefully I wasn't blocking too much stuff. But let's see what we got. Homeowners policy. So this is just giving you more information. Let's just go down quick. Not super important. It's just telling you different things. Looking at the different pages and stuff like that, so you can find the pages a little better on some of the stuff. And there's the special form. So, but that's your homeowners in a nutshell. There's a lot more I could get into, and I may get into that I want to tell you about as far as, what endorsements to look for, all that stuff. But I didn't want to make this video too long. If you just take this and you understand the basics of homeowners and what you're getting, and I could go into each one of these and really dive deep in. I mean, I could do a whole video on each one of these, really, so you understand them better. But this is more of the general looking at it. So there's one other thing I want to look at. So I'm glad you stuck around, because here we go. I'm going to do a different one, right? So here's a second one, and we're not going to go through all this. This is very, very quick. So just stay with me. I just wanted to show you how homeowners policies do look a little different. So depending on the carrier. So yeah, it's Paul's Peace of Mind Insurance, but obviously that's just a mock-up. But I just want to show you how things could look different, but it's the same stuff, right? Once you understand one, you can kind of get through each one. This was going to show you your, again, shows you your discounts up here. It's got your dwelling, what your home was value that to rebuild, how much you're getting for other structures, personal property, loss of use, personal liability, and your medical payments, and your deductible, all right here, right? Your total premium, $24.37. Your policy number, some of it will have it on every single page. Here you go. Here's all the endorsements again, right? So here's the list. Here's the number. These are some forms that insurance companies use, are forms that like an insurance company that makes all the forms will use, and like all these companies will use those forms sometimes these companies will make their own forms, they'll adapt it, so you might see some of the same ones with different ones. So right here, just because of paper, $25 fee. If you go paperless, you save some money there. Just another list of the endorsements with an index page. So if you jump down, you want to find what this stuff is, you just same thing we just did, right? P308, 1018, additional replacement coverage. So you'll get 150%. This is really good. So we'll settle the covered loss for the dwelling up to 150% of the limit of liability under coverage A in the declarations. So the A, instead of just getting the regular, you're actually getting an additional 150%. So that's a really cool thing to have. Here's inflation guard. So if your number isn't right, inflation goes up. This one has 9% that you're going to get increased on top of that. So that one's cool. I'm not going to go through all these limited fungi, but just to show you, here's the number. You go up to the index, and you'll find what's on it. So limited water backup. This one has 5,000. It's pretty common, 5,000 and 10,000. That's what you kind of want to see. Highly recommend water backup. It could be part of one of the policies, but if I go up there and scroll how much that is, to add on, it's a no-brainer a lot of the times to add, covering your gap up. So Ordinance of law I didn't get into, but if something changes, let's say you have to rebuild your home, but now the laws are different, so you can't rebuild a home the way it was, you're looking at 25% that they're going to give you, for the ordinance of law, because now maybe electrical has to be wired a different way, or plumbing, or something like that, because you have an older home. Ordinance of law is going to help you out in those situations. And here's an alarm, different things like that. Oh, this is very important. All right, so I hope you're still with me here. So your scheduled personal property. So you remember I said you only get so much for jewelry or different things like that. So in this situation, this person has a lot of jewelry. So the normal amount's not going to be a lot. So look, for $83 a year, they can cover, and now they have $6,645 worth of coverage for their jewelry. So it doesn't cap out at the limit. So obviously whatever you had, if you had a lot of golf equipment, all that stuff will go on here. And little tidbit here. I like to give the tidbits to the patient people that watch long videos. So if you're still here, one thing you might want to think about here is if you had this amount of jewelry or more and you just kept it here, totally fine, you're going to be covered. But when you really think about things long term, every time you file a claim on your homeowners, it's going to go, eventually it's going to go up. It's going to affect you, right? Because your loss history, plays a part in your rates. So, and that also goes to the property itself. So if you go buy a home and that home has claims, you didn't even live there, but that home just had claims before. It's all numbers. It's all a numbers game. The more claims that you have, or that property has, it's going to be reflected in the rates, because that's what they're looking at, is all the data based on the claims, trying to predict future claims. So, but to make this a little shorter here, get more to the point, although that is important to know that stuff, is if you were to file a claim on this jewelry, it's going to go on your homeowner's claim history. Whereas another thing you could buy is a separate policy just on your jewelry or whatever it is you have here. Then when you file a claim, it's not a homeowner's claim anymore. So just a little tidbit, something to think about. I'm sure I'll mention in another video for those that weren't patient. I'm sure they'll hear it again because that's such a valuable piece of information. So I hope you learned a lot. I wanted to show you a couple policies. If you have any questions, reach out. I'm more than happy to go through your policy, look it over, look at all these things, see what's going on, see where you're at with everything. That's what I like to do. And then if I see little gaps, little endorsements that we could add, that's not going to add a whole lot to the policy, like we saw $9 to get $500,000 worth of stuff. That's pretty much it. So, all right, that's a wrap. So, hope you enjoyed it. You got any questions? Reach out. More than happy to go through your policy, see what you got, and hey, maybe we can make it better for you. All right, have a great day. Take care.